it's Michael Saul, also known as Tiny, with the Market Autopsy video for the week ending August 31st, 2012. I guess it's also the month ending. All right, so let's take a look at what economic reports are coming up this week. I'm doing this on Monday at about 1 o'clock, and the U.S. markets are closed. Draghi spoke at 9:30 in the morning, but didn't really rock and roll the market so much. Tuesday, we jump right back in the water. ISM at 10 o'clock. Let's see. We have a bond auction, tentative bond auction on Wednesday. Thursday, we have the non-farm employment change. We have unemployment claims. We have ISM non-factoring PMI. And then Friday, we have the job numbers. So it's a 4-day week for all intents and purposes. And it has its spots, right, with the economic report. So just keep your eye on that. I use Forex Factory, but there's a couple of different sites that you can do in order to get that information if you so desire. All right, so let's take a look at the weekly chart of the S&P 500. And the reason I want to start with the weekly chart is that I want to get a bigger picture of what's going on here. So we're just off new highs on the year, and that's multi-year highs, as we see. Back here, we have to go back to 08. All right, and if we draw this line here, you can see we're right there at this swing high here, which comes in at 1440.24. That's going to be the main number to watch here going forward. Now, do I think we get there? My answer is yes. I do think that we have at least one more move higher in the market. So I am going to be watching to see if we get a push up there or not in the not so distant future. All right, I read a statistic that going back to 1928, the S&P has averaged a 0.12% gain in the month of September when we have been up through August. Now, it's a little weird because my recollection, and I was right, I wasn't right exactly on the year, but I thought the S&P 500 didn't really come into existence till the 50s, but supposedly the statistic they're basing it on is I read that the S&P or something started doing indexes back as soon as 1923 or something. So whatever. I'm just quoting the statistic. I didn't do the research myself. It is from a very reliable source. So it's just, and all it is background. Okay? That doesn't mean that we have to be up this September. I'm just giving a background of what has been the general occurrence when the market has been up through August previously, since allegedly 1928. Like I said, I didn't do the research, but I trust the source. So this is a 14-period RSI. I like to use this indicator on weekly charts. It's a momentum indicator. You can read about it or on various websites. Just make sure you're using it right. But what I like to look for it, I don't look to say, oh, okay, we sell when it gets up here and buy when it gets down here. I like to look for divergences. Now, we do have a small divergence here, but the divergence is not coming from an overbought area. This, okay, was a divergence after we were overbought, right? We can do a couple of these. Here's a divergence when we were oversold. Okay, updates, thank you. Here's a divergence after we were overbought, right? And we wound up still trying to push one more before we rolled it over. So it's not like, okay, we have a divergence and that's it, we're going to fall from here. No, I mean, I've already expressed my opinion and I think we have at least one more push higher here, but I don't ignore it either. It's not coming from overbought, but that doesn't necessarily mean that it's not going to be effective. So just something to keep your eyes on here. And, there's not going to be an "I told you so" out of this, like a lot of these super gurus love to do, or "I knew it." Well, yeah, of course you did, because you gave 16 different opinions and only 2 were valid, right? You could only go up or down, and you gave 16 different opinions, right? But, I'm just saying that it's something that I want to keep my eye on. And if it busts through this, okay, even the divergency, okay, then, I'll just take this off the table. All right, so that is the weekly chart. Down to the daily chart. Where are you? Remove. No, I want to get rid of the RSI to save. Okay, sorry about that. So down to the daily chart, we see we are in a bull flag here. Now, is this technically a bull flag? Is there an impulse? My answer is yes, because it is coming off the high. So this is still a valid bull flag, in my opinion. Now, some technicians may argue with me, and okay, I'm open to all arguments. To me, looks like a bull flag. Still feel we're going higher. If we drop out of this, it's not a failed flag. It's not a failed flag until it starts to go and then fails, right? But if it drops out of here, then it can still maintain the short-term uptrend here. That's not saying that it's going to crush my view that we're going to push higher here. All right. Yeah, if we get below probably this swing low or this swing low, especially the 200-day, I definitely change my mind. And if we even get below the 50-day, I probably move to neutral. But right now, I'm looking for us to continue to push higher. I don't know if we're going to go higher into the end of the day. Into the end of the year. For now, I'm looking one push at a time. NASDAQ 100 looks the same, which is good. Okay. Means it's not lagging anymore. It actually is. It looks like it's in sync now with the S&P. The Dow, lagging a little bit. It's pulled back a little bit here, but I don't care. If the NASDAQ and the S&P are in sync, in my opinion, that's what you're looking for. And in this case, they're in sync and both looking higher. All right, here's the Russell. Okay. I mean, Russell's still lagging. I've said it a million times, but I gained a lot of new sign-ups these last couple of weeks, so you may have missed it, or I may not have said it recently. But I'd love to see the Russell lead with the NASDAQ 100. If the Russell's in first and the NASDAQ 100 second, that's acceptable. The NASDAQ 100's in first and the Russell's in second, that's acceptable. Okay. What I don't like to see is the Russell leading and the NASDAQ last. Okay, but if the NASDAQ's leading and the Russell's bringing up the rear, I'm still okay. I'm still okay with that. Okay, in my opinion, that's still an okay market. And right now, the Russell's lagging here, but it does look like it's set up in a coil here. Let's see if it can get a break and try to catch its highs. I think the Russell does hit new highs on the year. I think what can happen here is we can push higher in the other three, the Dow, the NASDAQ, and the S&P, and then the Russell can maybe finish up with a push up to new highs for that index. So again, let me recap. I believe we're moving higher here. I believe we have at least one more push in us. To me, it's one push at a time here. I do not feel there's enough evidence for me to just come out here and just start pounding my fist and going, we're in an uptrend to the end of the year. I don't know. Okay, we do have the Fed meeting coming up in September. There are people that still think they're going to announce QE3. Okay, this past week we had Jackson Hole and Bernanke disappointed. At first, it was taken as a disappointment. Right, then the market recovered. All right, there was no QE3. I didn't think there was going to be. I'm not bragging about that. My opinion was based on, some people that I respect that I've read. I read a lot, and on both sides. Some of the people I respect actually thinks, he's gonna drop the bomb at Jackson Hole. And out of the 3 people that said that, 2 of them said, no, I don't think so anymore. The week leading into it. Okay, but I catch a lot of opinions, sometimes too many for my own good, right? What do they say? A man with 1 watch always knows what time it is. A man with 2 is never quite sure. Well, what about a man with 20? Right. So anyway, so now the Fed meeting is coming up. There's a chance he'll announce QE3 there. I don't think it happens. All right. I think the market, the economy and the market are quote unquote too good Not going to get into an argument about unemployment and how bad off we are and all that. I get it. I'm just telling you from a strictly academic perspective. The market's up whatever it is, 11%, whatever on the year. Okay, there's, it's not seen as being in trouble. That's just the way it is. All right, you have to accept that. We also have the elections coming up, of course. So, all these cross currents that can come into play into the end of the year. I think it's going to be a great trading market into the end of the year, and I'm excited for it, and for me, obviously, because I'm going to be participating in it. All right, the VIX. Now, the market is set up in a bull flag, like I said, but the VIX is actually rising off the lows. Isn't that bearish? Okay, the answer is no. Not necessarily bearish here just because the VIX is rising. As a matter of fact, what the VIX measures first and foremost is the amount of volatility in the market. It's fear and complacency. I know a lot of people like to say fear and greed. Greed is, in my opinion, the wrong word. It's fear and complacency. And right now, okay, it's still under 20, even though, in my opinion, you can't really put numbers on the VIX that are bullish and bearish. It's just that, getting over 20, especially over 30, the market seems to, the market is more volatile. Not seems to, the market picks up in volatility. So right now, that's not what we're getting here, but we are getting a little bit more trading range, which is nice, especially for those that are day traders. All right, this is the advanced decline line. Advanced decline line, it had the shot down on Thursday, but then on Friday, and a nice push up, hit a high, eased off of it. Overall, not really seeing much here. We were diverging here, but market's been pulling back a little bit, right? That's what a flag is. Not really seeing much. Volume is light, although Friday it was higher. But volume has been light, and I've talked about this before as well. The market can advance on light volume, and in my opinion, it's nothing to get overly crazy concerned about. All right? So as of right now, complacency sets in. It's just business as usual. Okay, and I know a lot of people, that's crazy, low volume rally. Okay, well, they've been calling tops the whole year. They got it right for whatever that was, a couple month correction, but the volume can die as the market rises. Would I like to see volume nice and robust as the market goes higher? Of course. All right, yeah, sure. I'd love to see the backup of the strength, but it's not always the case. Semiconductors. Okay, back over the 200-day after dipping below it Thursday. Yeah, it's not the greatest looking chart, right? It's lagging considerably to the broad market and the NASDAQ 100, but it's not totally horrendous. Here's Clad Tanker. Too ugly to look at as far as, like a pattern or something. NVIDIA looks like the socks, right? Held the 200-day. See if it can pivot off of that. Broadcom. Yeah, Broadcom in a nice, not a bad looking pattern here. Okay, here's Broadcom. All right, not really a bull flag because there's no impulse, but it's a stealth bull flag. Let's see if this one can kick up. Banks. Yeah, just grinding a bit higher. In a consolidation here. See if it can pop up. Try to get to 50. Bank of America. Yeah, not horrible. Right? Not the worst looking chart. Right? Again, this is not a bull flag. Right? We're in a range. This is a range. So this is not considered a bull flag. Bull flag has to have an impulse, but it has the appearance of it, which makes it a stealth bull flag. You want to know the difference? I'm available for mentoring. Let's see. I'm booked till mid-September, but contact me, tiny@stockmarkettransx.com if you want more information on one-on-one mentoring. All right, so here's you like how I just boop pop that little plug in. All right, so let's see if Bank of America, see if it can pop up here to the 8s. How about J.P. Morgan? Yeah. Citigroup, not bad. All right. Somebody pointed this out to me. It's in a range, and then it broke the range, and now it's kind of sitting on top of the broken range. So see if it can move higher. It's got to get up above this little consolidation right here. Broker dealers. Yeah, still lagging. Goldman above the 200-day, but not a nice looking pattern. You know, it's not completely horrible because at least it's grinding and overlapping. But, you know, this needs to get some extension, right? So far, the gap is holding very nicely. You know, yeah, it poked through it, but look at the rejection there, right? Morgan. Yeah, I mean, got to get through the 200-day, like Mason. Yeah, just not looking nice. How about healthcare? More sloppy than anything. How about the cyclicals? Yeah, I mean, you got the pullback here. I mean, could they, you know, get it popping here to the upside? We'll see. Cyclicals are always nice to see participate because that's where fund money tends to gravitate to. Gold with a monster day. Okay, on Friday after a dipsy do. So gold, you know, had the triangle. We identified it broke the 200, came back, kissed it goodbye, and now it is on its way higher. All right, so now we want to watch the middle of this candle here, about 169 as next resistance. Silver, also a nice move. Back over 30, nice. See if it can get to 3164, 3234. Okay. Earl, aka oil. 200-day is going to be that line in the sand. Can we get above it? Again, yeah, that's a pretty ugly looking, but you get, let's see. You get the idea. Yep, it's not a real bull flag. It's more of a stealth bull flag. But Exxon, look at some oil, various oil stocks. Yeah, not doing really anything wrong, just resting for now. Schlumberger, or Schlumberger, as I like to call it. 200-day, watch that for potential support. It's Conoco. Yeah, this looks like a bigger correction. If you go to the weekly chart, right, a big impulse down, and now you have this bearish correction here. Look at some of the glamour stocks. Apple, sorry. Yeah, pull back from highs. Okay, 20 EMA, watch that for potential support. Amazon, yeah, continuing to chug on. We talked about 250 a couple weeks ago. It's gotten there. Can keep going. Watch 275 next. I mean, at this point, those are the kind of numbers that you have to use. Okay, it's stretched here. I mean, it hasn't closed below the 10-day in a couple of weeks, so could get a pullback down to the 20 EMA. The GOOG, yeah, still nice and strong. Still want to see if it can test 700. Baidu, on the other hand, it's a piece of crap. We identified it back here. It popped up. Okay, and failed there. How's my RIMM doing? Oops. Hot lists. Get away from me, hot lists. Sorry about that. How's RIMM doing? Not yet at $5. I'm looking for this thing to get to 5. At least. Potash. Las Vegas Sands. Again, this is not a bull flag. It's a stealth bull flag. Let's see here. This can get going. This last one worked out pretty nice. See if it can get going here. You got resistance up here in the 46s. AWR. Okay, this is an interesting one. Let's hold. Yeah, trades on light volume, so you have to be careful on this one. Alright, but it is setting up in a bull flag here. Full disclosure, I do not own any shares of this. Alright, So I'm not giving out a low average trading stock to front run it. Sorry. Okay, I was just looking through my screens and this one came up. Okay, back down to its 50. Does it get pop off of this? Here's John Deere. Just sloppy more than anything. So that's it. Hope you enjoyed this video. Don't forget to join the mailing list to get this every week. This time I just decided. I mean, it's not really a private video. It's more just hidden, and I just send the URL out to those that subscribe. It's a free subscription. Just put your name in. You'll get my daily email. Yes, you will get some advertising from me. Okay. And you'll also get access to the Market Autopsy video every week. Hope you enjoyed it. And I'll talk to you again next week or during the week if you are on the mailing list. Have a great trading week.